Hi, it's Devan from Retirement Wellness SA. Now, today I'm answering something that's particularly important to pensioners. And perhaps right now you are receiving an income and suddenly you've identified that you are paying a lot more tax than what you should have been paying or what you were paying before. Maybe you've heard about this new ruling that SARS has put out and suddenly you just baffled. Why is it that SARS is charging you as a pensioner a lot more in tax? Shouldn't you be paying less now in tax? And you've been paying tax your entire life. So when is it going to reach a stage that you actually are paying less? Well, today I'm answering that question for you. And that in more detail, we're going to look at this question. Are pensioners paying more in tax than what they should be paying? Weirdly enough, this is a ruling. This is something that SARS has put in place, which is beneficial to pensioners. It's extremely beneficial to you. It's just the positioning, perhaps the way in which SARS put this across, and that has made this to become very, very complex. So I'm going to share with you how the system works, and it usually impacts pensioners who are collecting two streams of income. But now I need to define what income means for you, right? Or how SARS would see income. So because you are retired, you are collecting some sort of income. And that income could be maybe you had a pension fund or a provident fund. It could be a retirement annuity. So your one income, I'm going to call it pension, right? But it could be pension, provident, it could be any income source. But that's one stream of income that you are receiving. Another stream of income could come from perhaps you have money that's sitting in a bank account and earning interest. Maybe you have fixed deposits or some kind of investment that's earning growth. So now you're earning interest off that. Another stream of income could be perhaps from a late spouse. So at the time of your spouse passing away, you now started to receive the same income or reduced income or some kind of income from your spouse. Now I'm using examples because I want to share with you that income is not necessarily from what you would deem to be your pension or provident fund. SARS is looking at income from the perspective of all other sources of income for you. So it's pension, it's interest, a late spouse, and these are just my examples. Now, what was happening previously, prior to this new ruling that has come about, is when you were doing your tax return, so we'll use the time period here, let's just say from the 1st of March, this is the cycle to when tax runs, and this is, I'll say 28th Feb. So usually SARS had this 12-month period with which they were having a look at what sort of income are you earning inside that period. And what they knew was the pension that you were collecting. So you had money that was with, for example, an insurance company. The insurance company is paying a salary to you. I'm going to use examples here to make the math look easy or just to have you understand this better. Let's assume you had 20,000 as an income. And from a tax perspective, let's say the insurance company was paying 2,000 Rand in tax. Again, we're using examples just to make this look easy or make you understand this better. So we're saying you're earning 20,000 as an income. The insurance company is taking 2,000 away, which means what comes into your bank account is 18,000. That's what you're seeing after tax. So this is your after tax. Now, at the end of the tax year, so if you look at the period here, at the end of this tax year, when it's time now for you to submit your tax returns, SARS now is having a look at everything else that's happening for you. So they're having a look at your pension fund, they're having a look at the interest that you are receiving, they see it as an income. Then if there's another source of income, maybe it could also even be rental income. So let's put that in here, could be rental income. So there's different income streams, but when we come to the tax, when you're submitting your tax return, SARS is now taking this and they are adding all of this up. So they are adding all of it up, meaning Here, you can see it was only 20,000 as an income. So you want a certain rate in terms of taxes. Here, in my example, let's just put some figures so that we have something to work on. Let's say this was 20,000. I'm going to use the example for the interest. We're working monthly, right? So interest for the month here, I'll say was 3,000. Let's say from your late spouse, there was an income of 4,000. And then your rental itself was, let's say 5,000. So if you look from an income perspective, what's taken place here is your income that SARS knew about was just 20,000. But when it comes to the end of the year and they're working out your tax return, they're now analyzing and saying you've earned 20,000, you've earned 3,000, 4,000, 5,000. So they're adding all of this up. So if we add that total up, that's 32,000 Rand, which then means you could have moved up the tax scale. So 20,000, you agree, because the more you earn, the more tax you pay. So on 20,000, you're paying tax at a certain rate. And on 32,000, the tax is naturally going to be a lot higher. So what was happening in this scenario? When SARS was taxing you, the insurance company paid this 2,000 in tax for you. And then when it came to you submitting a tax return and SARS found out about this, they're now saying, we were just collecting 2,000 Rand a month for you in tax because we only knew about this. We didn't know about the other 3 income sources or whichever other income sources you have. As a result of that, when we add up the income sources together, you're now on a higher income threshold, which means you're on a higher tax bracket. So we should have taken more than 2,000 Rand away from you, but we didn't, which then means we want you to pay money in. So this is where you might have in the past come to a circumstance where you're having to pay money into SARS. Okay? You're having to pay. So it's not a refund and you're paying in, which then you might have been questioning yourself, hey, the insurance company is paying 2,000 away. Why am I still having to pay tax? And now you know it's because of the other incomes that you're receiving, which are regarded as income sources. So what's changed now? What's changed? Let's assume in my example that what you should have been paying in tax is, I'm using an example. Let's say it was 5,000. This is what you should have been paying in tax, which meant there was an extra 3,000 Rand a month that SARS is now saying, hey, you need to pay us that, which for a year is 36,000. So let's do it this way. This is what the tax should have been, 5,000 a month per month. This is what you paid, and that's 2,000 per month, which means this is what you, I wouldn't say short, this is what you owe. You now owe 3,000 per month, see? Which for a year times 12 months, that's 36,000, which is a lump sum that SARS now wants you to pay at one hit. You see, at one go, they want you to pay that lump sum. So a lot of retirees found this extremely challenging because that sort of capital might be difficult for you to come together, and then not paying it on time means you could attract interest and penalties from SARS. So it just became a bit of a messy situation. So as a way to make this easy for retirees, what SARS has done is they've arranged with the insurance companies and all the providers to have an understanding as to what your total income is. See? So they want to have an understanding as to what your total income is and tax you the appropriate rate. So using my example, instead of them saying to you, they want you to pay 36,000 at the end of the year, they're now saying, we are going to increase your tax every month. We're going to make you to pay 5,000 every month, as opposed to 2,000 a month. You're now going to pay 5,000. So by you paying 5,000 a month, it's not you paying extra in tax. It's just when it comes to the end of the tax year, you no longer have to pay the 36,000. In fact, chances are you may get a refund now because they're taxing you on the correct way. Now, there are all sorts of techniques that I have for retirees in which we can reduce the tax that we pay. So if that is something that is important to you, you're welcome to reach out to me and I'll guide you on those techniques. But for now, I want to hear from you. So please comment below. Has this been helpful? Have you reached a stage where this has happened to you, where your taxes have been a lot more than what you should since SARS made the ruling change? And how has this video now helped you to understand how to restructure this? So I want to hear what your comments are. Again, please like the video if you found it helpful, that is, and remember to subscribe so I'm able to produce this content for you. You're able to view the content that we produce for you as often as we can, and also learn new tax tips and strategies. I look forward to chatting with you soon.